afternoon, ladies and gentlemen, and welcome one and all to this afternoon's market report breakdown session. Ready and raring to go out here in old Blighty. We've got the sun shining today. I'm feeling energized. I did realise it was a 4-day week though, due to the Easter holidays, of course, but that's fine. What I am hoping is that we get a little bit of additional market volatility through our gates as a result of only having a 4-day trading week this week, which would be pretty good. Hope you guys are all doing well though after a nice weekend. Good to see you, Braden. Hello there, buddy. Hey, HNC as well. Good to see you, man. We don't have a great deal of Egon to really dig our teeth into this week, unfortunately. And that's predominantly because it's non-farm week. But with the non-farm payroll data coming through on Good Friday, there's not actually going to be anything to review or trade. So it is going to be a little bit more reliant, again, upon the more technical analysis, I suppose. And obviously keeping our ear to the ground on anything the DT is going on about, which seems to be our lives at the moment, doesn't it? We seem to be very plugged into what Donald's doing, and anything he does do usually shifts the market sentiment crazily for 24 hours and then leaves the aftermath for us all picking up the pieces. Hopefully that's not going to be the case this week, but we never can tell. Otherwise, we're just going to be relying on some good old TA, which there doesn't seem. I mean, there's no problem with that. There's no problem with that. Last week, I was feeling a bit, I don't know, I suppose drained is the right word. Yes, last week, and that was as a result of just not really having, trying to make something out of nothing. It felt like every day really was just one of those cases of grinding along and just trying to, well, exactly as I said, get something out of nothing. But on Friday, I was feeding all the data through into my tools that I use for analysing trading performance and so on and so forth, and it was actually a really strong week. It was not bad. I don't even think we did 8 trades last week. I mean, don't quote me on that. I did send out the full report to everybody in the general chat. I'm not sure how many people got around to actually looking at it. So 7 trades. 7 trades last week, guys. Yeah, that's not. I mean, bearing in mind we've hit trading weeks sometimes where the end of week report has 25 plus trades. I mean, we usually are quite high volume traders, but we did 7 trades last week and did 3.23%. I mean, that's not bad, is it? That's brilliant. We had 6 winning trades and a loser in the NAS 100. So, as much as it might seem very depressing day to day when we're trying to sort of sift our way through the noise, it's actually coming through the other side of it. It's not too bad. Not too bad at all at the end. So maybe we'll get another one like that. It is nice. It is nice to have a little bit more action. Absolutely, it is. But if we don't get it, we just focus on those, consistent setups in the US markets every day, then that's good enough. And it should be. It should be good enough. Right, let's have a look at what's going on this week in terms of the report then. So, 4 trading opportunities this week are the DAX, the USD CAD, UK Brent and gold. I did want to move away from the US indices this week just as a result of what we saw last week with the majority of the indice trading. It was not always a great deal of fun, and we did have to sort of go with the throes of the volatility as a result of Trump. We ended up in things that ideally we wouldn't have been stuck in for so long as a result of just the exhaustion from the markets. Nevertheless, I've gone for a European one this week, which has still seen quite a lot of volatility. We will be potentially looking at the ECB increasing their rates now over the course of the rest of the year to combat the inflation problem that's come about as a direct result of everything that DT is doing, which is a real sort of a real indicator of where the policy is at the moment and what the central banks are really concerned about. I mean, God help Fed Chair Powell. I don't know when the end of his term will be, but it's certainly closing in around him at the moment. And I think the guy who comes up next, which is ultimately a gentleman that's been in Trump's back pocket for a long time, Trump ultimately liking to place generally very extremist individuals in roles of power that shouldn't really ultimately be there. I mean, it doesn't bode well. It really doesn't. I think the Fed Reserve is going to be in some real tough times ahead without the leadership of Jerome Powell there. Kind of take things in his stride like he usually does. He's pretty good at his job now after so many years, I'd say. But yeah, so that's all to come anyway. I mean, it's going to be one hell of a market show for us over the next couple of years. Now, looking at the DAX, it's undergone a pretty sharp move to the downside. Obviously, we had the big bounce and then we had the sell-off again. I think that is going to continue. So a bounce back up to around the previous highs from this point on is probably considered quite likely. Next up, we got the USD CAD. I was looking for a move up into big liquidity for this one. It's had such a decent rally recently over the course of maybe the last couple of weeks, maybe 3 weeks or so. And it's had a really good move. Just want to see it get into the bite point, to the big previous inflection point, and then to look at a sell-off back down to what we would deem as the breaker structure, but for a long-term daily trade. That's what that grey band is down there. That is not a big point of liquidity necessarily for the 15-minute time frame, but on the daily, it's a breaker structure. And that's what I'd be using to take the longer-term trade. I'm not really in the vibe of taking a very long-term trade short in the dollar index at the moment. That doesn't fall into my risk parameters, but I would equally say that it could well have some legs soon enough. I think it could have some legs soon enough. But we are just going to make do at the moment with the intraday version of it, which is just a nice little 15-minute intraday trade back down to that breaker structure point. So I think that could be quite nice for us. As we move down, we've got UK Brent, big liquidity either side of the market. Obviously, we've all been at the forefront of the volatility here with the oil shock that we've been looking at as a result of the US and the Middle East. Those tensions aren't going anywhere, but I do foresee the prices to just continue ranging between these 2 points. It's a really wide range. By the way, it's a huge range. So I don't think we could look to really see the entire thing done this week unless something else happens fundamentally. Which means that we'll be breaking the range down into at least 2 halves. If not, we'll be breaking it down even further. But for the time being, that's what I would foresee with UK Brent. A move lower from where we're currently trading back down to maybe 104 this week. And then beyond 104 back down to maybe 96.80 or something the week after. If we don't get any kind of major volatility strike from something, then that's what's going to happen. If we do, then sky's the limit really, guys, isn't it? We don't know what that's going to look like. We don't know if it's going to be a U-turn from the US. We don't know if it's going to be even more increased tensions, which is going to obviously ramp up oil demand if ships keep getting blown up in the Strait. So we're just going to have to take that with a pinch of salt. In terms of gold, we are looking at 2 relative bullish patterns here. I think the most likely one is probably for the price to continue straight through this week. Again, I'm not actually looking for where the end of the arrow is reaching. It's not really what I'm looking for here because I don't anticipate there anything majorly happening this week to drive the price that high. But it is just about overall bias. That's where I believe it will get to eventually over the course of the next week or two. By which case what we're going to be doing is, again, just like UK Brent, we're going to be breaking the margins down into 2. And we'll be splitting that trade, maybe taking it up to the sort of 50% area in here, first of all, and then working our way up to this level in time. The secondary opportunity, the one that is in there for the sake of having a split bias and getting something on both sides of gold, is the short. And that's from this area for a move back down into the anchor point down below. That's a really nice trade, and there's nothing wrong with the setup at all. I just don't believe that that's what gold is going to do first. But, what I believe, it doesn't really matter. We have to trade what we see and not what we think, as the saying goes. So I believe that if we get the right breaker structure in there, we can take a short back down to the lows and then ride the wave back up on the other side. The only thing that's going to do is it's going to double up our profit margins. That's the only thing it's going to do. We'll be able to take the profit on the short, follow up with the profit on the long. Jobs are good in, So moving on down to market challenges, as we already know, there's literally nothing going on. We have the Fed Chair Powell speech, that's today, and then we got initial jobless claims, which registered as a 1. It just scraped through, but you know, if it scraped through, it gets put on here. So yeah, it registered as a 1 out of 10 on my algorithm, which means it's basically going to be a 15-minute blip on a candle, I should expect. The Fed Chair Powell speech was registering as a 5 out of 10. You might get a bit of intermarket correlation going on between dollar and stocks or dollar and gold, for example. But again, guys, we're really not looking for anything extensive here or high conviction setups as a result of this. And then the big key one this week, obviously the NFP, is on Good Friday. So it's going to be completely irrelevant to us anyway, as we won't be here. So moving on down to the SSV, again, not really anything to note. Good afternoon to you, Cora Tim. Good to see you, bud. Apart from the VIX, which is at 57.38% bought now, the VIX is looking pretty high in terms of the volatility. This will be as a direct result of the White House, though. Okay, direct result of the White House and what it's got going on at the moment. It cannot be seen to, you know, have influence from anything else right now. Just what could potentially happen behind the scenes. If the markets are scared and they're jittery and they are incredibly reactive to what's going on around them, which they are at the moment due to Trump and his insane ideas, that's going to be high. So we can't look at that and be like, oh, it's going to be a fantastic week this week because we've got lots and lots of volatility coming through in the markets. It's not an exact science like that. What it does gauge is the potential for there to be extreme volatile strikes. So the chances of that happening are slightly increased at 57.38%. So that's something to lightly consider, I suppose. UK Brent at 54.2% is quite bought. It's like on the cusp, I would say, of probably being quite a decent indicator as to potential buying opportunities coming through the market within the next sort of 72 hours. And then we've got gold at 49%. It's nothing to mention there. Gold, USD CAD, and the DAX are all relatively right in line with where they should be. Now, coming down here to the economic and order book impact report, again, Fed Chair Powell speech, initial jobless claims, 6 and a 2 out of 10. I've already, gone into depth about those anyway, where we're looking at with both of those events. I think the Fed Chair Powell speech is going to be more about upkeep, a little bit of admin with regards to the Middle East situation, the increased fuel prices, the opening of the doors to Russia. Is that going to dampen the inflation in the US? Are they going to look at increasing rates by 25 basis points, or are they going to keep rates stable where they are at the moment? It's kind of what we already know. It's everything that we already know. It's just potential for him to get some thoughts off his chest, really. But I don't think it's going to be anything of any surprise or major news to us guys anyway. It's going to shape sentiment for the next week or so. Coming down here into the MFT, we've got, we've not really got anything to mention down here too much. Commodities at 55%. That's probably worth a shout out, actually. Yeah, I mean, commercial, non-commercial longs at 54.91%. That's quite bought. You think about that 5% margin. That's a lot of money. That's a lot of trillions of dollars in the commodity space at the moment, which are bought rather than sold. Not really seeing it too much in our NG though, which I was going to come on to, but it seems like a good segue to it now. Look at this damn thing. Last week I was saying, we'll leave this in because we've got the margin to cover the gap. The damn thing had a gap, absolutely ginormous, team. What a pain. We ended up there on Sunday evening at 3:06. And on Sunday evening, this was the open, sorry. So we opened up there, and within the space of 3 minutes, we closed down there at 286. 3 minutes. That was the size of the move that we had. A 6.5% move south in natural gas. We did end up getting saved because, as I mentioned, we had enough profit in the tank, and that's exactly why we we do the things we do. But yeah, massive gap down anyway. We're currently trading at 292, which is just above break-even point. It's bloody annoying. But there we go. We're still in profit at the moment, just a touch. So we'll have to wait and see how that one goes over time. Moving down into equities and focus this week. We've got Palantir. We've got small microchip company. We've got CRWD. We've got EMPH. All of which are okay. I wouldn't say none of them are amazing buys. But the good one this week is Vertiv Holdings. And that is definitely a decent buy. And it absolutely, as I've already noted there, it definitely does stand out as the highest conviction play this week. It is right in the infrastructure powering systems that are behind the sort of mega cap companies, Amazon, Microsoft, and Google. So it's got a big part to play. And the thing is, it's not a mega cap company, it says, which means it's got a hell of a lot of upside potential. It really can be squeezed, this one, and it will be squeezed a long way, I should expect. So definitely have a check out on that. And finally, as far as the institutional buying interest by sector goes, AI infrastructure at first place at $3.1 billion inflow. Again, this is like a weekly theme at the moment. But interestingly enough, our second and third place this week, hedge funds have put 2.3 billion in cybersecurity, which is a real outlier. We haven't had cybersecurity in this list for months now, and that's now reached second place all of a sudden with 2.3 billion capital inflow. The third place one is energy transitions. Now, I've got to be honest, I don't even know what that is. It registered up on my feed of where I get this information from on that particular one when I was doing my report. I had to Google what energy transition systems are and the companies that deal with that. But hedge funds have bought $2.1 billion in them as well. So there you go. Potential money makers for over the course of the next couple of weeks. Hedge funds are buying it. You want to as well. Right, team, that's about it for the market report. So here's the fun part. The information provided in this market analysis report is for informational and educational purposes only and should not be considered as financial advice or a recommendation to trade or invest. If you would like to read the full disclaimer or any more of our T's and C's, please head over to www.theutc.com and go and see for yourself. Thanks a lot. Now, let's get on to the charts. Have a good look around there and go through the whole screen transitioning process. Right, there we go. All right, so this is what I was saying about natural gas. For those of you who are with me right now, of course, in the trading community, we had the whopping gap down, which landed up here at the closed market. The open market was up there. We went straight the way down to 286. It was a bloody close call. The market has just recently bounced perfectly down to the point off of our entry to the trade in the first place. So it's almost like we're starting completely again from fresh, which is a real shame considering we almost hit target before the end of the week last week. But nevertheless, it's open, it's running, and we're not in the red. So there are things to be positive about. Breaking on down the US indices this afternoon. We're off to a pretty big start. We're not off to it, I suppose. Monday's been pretty good. It's been pretty good throughout the Asia session. The session so far for us hasn't been too much of a change. It's been very much the same kind of continued bullish trend that we've seen overnight, which is quite good. But what I'm most concerned about with these indices is where we're currently trading at right now because of the time of day we're sort of participating in. So it's just coming up to 2 o'clock really. We've got 8 minutes to go before we get to the top of the hour. We've got about 35 minutes to go, let's say, 35 minutes to go. By the end of the stream, it'll be about half an hour, I expect. From that point, is the market going to be able to breach 64.40, for example, on the S&P, or way higher on the NAS 100? We're definitely not going to be able to do that. There's no way market's reaching that before the US Open this afternoon. So The US, so the US 500 straight away is going to be the front runner for shorts. Our own personal little front runner for shorts. We like this. So we've got the breaker structure in there. We've got the no man's land. And I would anticipate shorts coming down to, let's say, about there. I think that's a nice trade. It's got good margins on it, that one as well. So we could, I'll tell you what, actually, guys, just to be more safe than sorry, I'm going to increase the size of the no man's land and bring that level down a little bit. So the short is going to be between there and there. Stop loss for this one, nicely tucked in behind. You got yourselves a 1 to 3. Margin in there is untradeable. Don't want to mess around with that. Let's move on up to the NAS 100. So, as mentioned, no way in hell we're going to see 23.55 and then reject and trade back down. Not today. I think the best case for this one is a breaker structure below there. That's a really nice structural point. The target profit for this one probably situated where I put the S&Ps, and that's at the midpoint of the W reversal down there. And then this is going to be the trading margin. So, entry, target, roughly, always roughly. And your stop loss, which is going to be about there. And that's going to yield you guys a 1 to 2.7. Download. And then we've got the US 30 Dow, which is different again. All three of them a little bit different. Got the main anchor point there. We have the breaker structure access point for the trade, which is about there. We can definitely thin that out a little bit. And that one is going to be in the margins here. And that one's going to be a 1 to 2.65. Now, the common denominator between all three of these, they're all short, aren't they? Every single one of them is a bearish bias. If we want to trade bullish breakouts today, the Dow Jones, no, the Dow Jones is going to be a no-go. I think we're going to have to, yeah. So the only long out of all three indices that I would consider is this little long on the NAS 100. It's the only one. Everything else, we'll take a picture of that one. Yeah, everything else just does not have the availability. Big liquidity above price, no path of least resistance on that one. We've got the potential for a breakout of the level, but then we're sort of smashing up against the walls of this 64.70 area straight away. If we go on the US 30 Dow, the breaker structure for the long, if the target is 45.727, is going to be about here, which means the market would need to make it down to this level and then bid back again. We don't even have a fantastic margin of availability for that trade. So it just keeps on increasing in terms of our risk, in terms of the risk of structure, the risk of the trade. The technical risk factors are very, very common at the moment, I would say, in these two. So the only long option that we do have is that NAS 100 for this afternoon. And look, it's a 1 to 2. What was it? A 1 to 2.9 almost. That's not bad. We're happy with that. We're good with that. And that's going to be it, guys. That's everything. That's a wrap. So, are there any questions or anything? Nope, you're all good. Excellent, Braden. Thank you, sir. All good, Cortim. All good, H&C. Excellent. All right, chaps. Well, have a great afternoon. Take care of yourselves out there. And I look forward to catching up with you soon enough. Let me know if you need anything, yeah? I'll see you then. Bye-bye.